Um, and I'll babble on a little bit here. Um, we're fortunate to have Mariana Flores Herrera from Wells Fargo Home Mortgage, a really gifted and talented loan originator. Her title is Community Mortgage Loan Consultant, but basically, she's someone who's knowledgeable about down payment assistance and a lot of things for first-time home buyers. So we're really blessed to have somebody in the industry actually here to talk with us. And Home SF, who we're going to be talking about in the slide coming up, is putting this on for your benefit, basically to give you some basic information and see if you want to continue forward with your education to help you get into a home in the Bay Area. Um, yeah, there it is. Okay. Now, this workshop is being recorded. Home SF has a great website for renters, home buyers, etc., where they show things like this that are informational and keep them available for people. And keep in mind, we're going to keep you on mute until it's basically over and we enter the question and answer period. You can, however, go into the chat room and we have Marianne in the background basically producing and running the show. And she'll be monitoring that for you. So keep in mind, you're going to be on mute the whole time as we gab away, but you can add questions at any point um, in the queue in the chat room. In fact, a couple of you, whoever's around there, why don't you just put in hi, so that Marianne can see that you know where it is. Okay, as we continue forward here. If you have any difficulties, communicate via the chat room or email info@homeownershipsf.org. Um, these are the instructions for closed captioning. Please look closely. You'll see it separated between for computer and cell phone or tablet. Looks like the one big difference is that on the cell phone or tablet, you have a toggle switch that show captions, and on the computer, you have an up arrow where you basically pull it up and move forward so that you can have captions in the language that you speak. So take a good look at this if you're in need of closed captions, and obviously selecting the right language. Almost wish it sometimes in the past that I've spoken other language just so I could see how accurate it really is. But you know, uh, typical American here. I wish I did. Who is Home SF? Years and years and years ago, there were five nonprofits, the same five you see here now on the screen. And basically, we developed a collaboration of the agencies, kind of like a hub for local affordable housing, whether it be for rent or for purchase. We basically connect renters, home buyers, and homeowners with education, counseling, and resources. These five nonprofits under the Home SF banner give you options of who you can contact, also give you options for language and things of that nature and locations all throughout San Francisco. So this collaboration is a way, and especially when you go and see the Home SF website, which you're going to get a link to soon. It's a great website that just gives you a ton of information especially when you're starting out in San Francisco, or even if you think you're knowledgeable about places to rent, how to buy. It's just a valuable resource. And once again, Home SF is or are the five nonprofits you see on the screen right now. Housing and credit counseling services. This is what SFHDC, who I work for, provides, but I'm also going to tell you a lot of these same subjects are provided at the various nonprofits. We're very serious and dedicated to what we do. Home buyer counseling is a big part of it. Throughout the United States, the Department of Housing and Urban Development um, has developed a first-time home buyer program where when you attend our 6 hour and 2 hour and on types of education for home buyers, you get access to product like down payment assistance that helps you come up with the down payment to help you buy a home. And yes, you say in Santa Clara County, homes are too expensive. No, they're not. When you have adequate down payment assistance and a loan consultant, um, like you're going to hear in a moment, talk to you about how to get you there. But we also do things like post-purchase support. You know, you want to refinance or you're having issues on some side, we're there for you. All the HUD housing counselors, rental counseling. I personally in rental counseling like to provide, we go over things like credit and we'll look at it and look at it together along with giving a larger crowd counseling. But we'll do all the things, budgeting, looking at your credit, how to present a package when you want to go rent properties, for beginners to advanced. And credit counseling is special, which is just mandatory, and not just for home ownership or renting, but for insurance and so many other arenas, understanding what credit scores really do. Quick, fast fact, there are actually 38 different types of credit scores in the United States. You only hear usually about one or two of them, but credit as it is structured itself really surrounds just a couple of principles that if you're made aware of, it'll guide you down the road. SFHDC also does small business and entrepreneurship, um, not so much counseling, but more we have literally created a place called In the Black in San Francisco, which is a group of entrepreneurs we train that are doing business. We pick several during the year and continue on. But again, when you look at these core services, think of the majority of them being handled by all the 5 nonprofits you saw in the hub group. So credit, quickly, they have various things with C's. Sometimes they say the 4 C's or the 5 C's. We're going to break some of it down. Character is what people in the industry call your credit history. That's why I kind of don't like the word character, because I don't really think it's representative of your character as we know it. But your credit history is going to be important for you in employment, in insurance related costs, getting a loan, auto loan, home loan, renting property, in so many arenas, some of which you don't think about. That credit is extremely important. One of the areas we have a whole class and all the nonprofits do, where we go deep on it. Character, credit history. Your ability to pay the loan back, capacity. Oddly, this also relates to your credit because your credit history shows over time how you've been able to pay a loan, which is the key to everything. You can be a billionaire, but if you don't pay your bills on time, what does it all mean? There's somebody who wants to lend you money or see your quote character. So capacity, your ability to have the cash flow to pay the loan on a timely basis. Capital, do you have the money in the bank, the down payment, in order to lower your sales price to an affordable loan amount, the costs associated with getting that loan, and a certain amount of payments and reserves so you're not broke when you buy the property. Capital is a key. That would go with learning to budget on our end. If you don't have money in the bank right now, maybe you need to understand how to get there. And think about that for a moment. We can talk about home ownership and renting, et cetera, but let's talk about a goal of being able to not live paycheck to paycheck. Let's talk about a goal of saving money so you have money set aside for emergencies. A lot of the principles related to getting a home loan, credit matters, or renting are related to things like budgeting. And you're going to find that works for credit as well. It's all encompassing these arenas. And I believe we have one more C here. Collateral. When you're buying property, I mean, isn't it interesting that you've got something that has a value, real estate, right? You want to buy a home, real estate. So is the property value sufficient to secure the loan? I want you to think about that a moment. You always hear about an appraisal being done. And well, does that mean the property is worth what the appraisal says it is? The reality, one little tidbit is no, once you buy the property, there's your value. Now let's see if you can recoup it down the road. Collateral is a key in the credit decision, and reviewing the appraisal, reviewing the credit report, looking at your assets and all the things that you're seeing here all go into making the decision to help you purchase down the road. We go deep in every arena to prepare you before you actually go get loan approval. We talk through these areas. I'm going to mention real quick too, one of the keys to first-time home buyers down payment assistance is you're not putting as much cash down as all those rich folks that are out there. The Department of Housing and Urban Development years ago made the decision that an education can basically make up the difference between having skin in the game and not. In other words, if we educate you, you're more likely to stay in the home when times get tough. Like you remember recent years in the financial apocalypse, our values in California came back, but in a lot of other areas it didn't. Why did some people stay in the home and not? Well, a lot of times you had a lot of money invested in it, so you had no choice. In this case, your down payments might be minimal. So this education we're talking to you about is considered extremely important in lieu of hundreds and hundreds of $1,000s of cash for the down. Credit does matter in the decision. There are three huge bureaus, and I want you all in attendance to write what I'm about to give you verbally down. There is a website called annualcreditreport.com. Annualcreditreport.com. This website was set up because decades ago, the Federal Trade Commission said to the big three here, Experian, Equifax, and TransUnion, gee, you're not really doing a good job of not making mistakes when you're doing these credit reports, but you can't get one for free anymore. They wanted them to create this site, annualcreditreport.com, and it basically leads you to each of the three bureaus when you go on that site, one at a time. Because of COVID and other factors, it's actually monthly that you can get this free credit report as well. I just wanted to mention that as a key resource. When you see mortgage lenders typically use the mid-score, here's what they're talking about. As quiet as it is kept, you are digitized when the loan decision is made. You are turned in to a package of appraisal information, pay stubs, W-2s, bank statements, this thing called a credit report. And it is actually scored. And the majority, well above 95% of the mortgage lenders out there that are lending on homes use a scoring system. So when they say mortgage lenders here typically use the mid-score, they mean that each of these bureaus has their own credit score, and they're going to take the middle one, to put it through the system to get you pre-approved. We can go deep on that on the credit report, actually pull the same type of credit report a mortgage lender does, and quote, help you address errors or any other issues, teach you how to play the game. And in checking your credit, this is the group, the places to call, and to go to the website. I would really recommend as they come up. Experian is the first one. I would really recommend as they come up, you keep these in mind, take a screenshot. Here's TransUnion and how to get to their website, their phone number. Same thing with Equifax. These are the big three um, in the United States. And when I say that, I mean they go back to the 60s when they were small and tiny. Nowadays, they're huge and enormous and have such a major impact on our life. Keep in mind that what I told you about annualcreditreport.com as a way to get into all three of these to get your credit report and check on it once a month right now. Once a month. There are other places that will offer it to you. I'm just going to say if you're going to use another source, especially for credit scoring as an example, make sure the agency that's giving your quote free credit score is FICO based, FICO based. Extremely important because FICO basically rules the world right now in terms of credit scoring. Everything is a variation off of FICO. And I think we have one more thing at the bottom here that says once per year, but it's actually once a month now. Going to annualcreditreport.com that this can be done. And I encourage you to go once you go into them and get your free credit report, go back. There's a lot of very good consumer information on these sites. Oh, by the way, they say they don't provide a fee credit score. If you hit them at the right time, they will. But keep in mind what I said about credit scores. You want a credit score estimate to be FICO based. What's good credit? This slide is excellent, and we'll ask Mariana if how accurate she thinks this is. Put that down as one of your questions, because this is the area that you need to know: can I get a mortgage loan between 680 and 719 if my middle score reaches that? But in terms of okay credit, good and excellent, this is a good start. When you get below 620, realistically, you're having problems on your credit report. When you look at that score, you're having problems. It's one of the things you can come into us with, and you're thinking about buying a home and you find out your scores are 540, 560. We'll look at it with you and talk to you about how you can improve the score and get to the point where you can go get pre-approved. Um, Good credit, the 680 to 719 is just that. I agree with that. This slide, I usually don't. But yeah, you're at a point usually at 680 to 719 if Mariana tells you so, where you can possibly buy a home. Um, and getting above that, I believe the last time was a couple of years ago, they gave a nationwide average, and I believe it was 717, just a compendium of everybody added together and what the average is. But the time you really don't want to start talking about credit repair and anything of that nature is when you're in the 720 to 850 range across the board. One little tidbit about a great way to establish credit that isn't necessarily logical: the older your credit, the better. Always on credit cards, watch your opening date. Okay. The older the credit, the better. And when you come in for the one-on-one, we'll go deeper on stuff like that. We also do budgeting. HUD is very big on budgeting. I'm talking about going line by line and looking at where your money goes, which is never a lot of fun if you've never done it. If you have done it, as someone like me, you realize real quick where you're weak and you adjust, adapt, and get yourself out of the situations where, well, one, your goal as a first-time home buyer is going to continually to save money, continually over and over. But what if you have debt to pay off? someone like Mariana is going to get in touch with you and talk with you about what you should do first. I, as a housing counselor, will go over the budget with you and give you resources, and even just meet with me monthly basis until we get to the point where you're actually saving money, which is always the goal. So go to Home SF, and there's the website, homesanfrancisco.org. And all these nonprofit profits provide the credit we're talking about, analyzing credit reports, credit scores, and budgeting workshops to help you learn to save money over time and get out of these month-to-month situations that we all get into constantly. I want to present to you Ms. Flores Herrera, a working mortgage loan originator, everybody. Do you hear what I'm saying? You need to hang on to her every word. It's going to be gold. That's what happens when you get somebody of this quality to present and give you information. Keep in mind, Home SF tries to, all the member nonprofits tries to get someone like this to provide the information to you because it's just such a key. Mariana, if you would mind.
Thank you so much for the introduction. My name is Mariana Flores Herrera. My NMLS ID number is 448115. I work for Wells Fargo Home Mortgage. As you can see, I prepared this room just for you guys. Today, we're going to be talking about different things, and we're going to start with upfront cost down payments. So we have different products. I don't know if you guys have heard of what a conventional loan is, what a jumbo loan is. So I'm just going to talk of them really fast. So anything below $1 million, we're going to make it easy, is considered a conventional loan. First-time home buyers usually are in that range. We have many programs that start with 3% and 5% down payment. Anything above $1 million usually is considered a jumbo loan. And the requirements for down payment usually is right now is around 11% to 20%. Most of the time, if you're looking at $2 million, you're looking at 20% down payment. So these programs that we're going to be talking about, less than $1 million, not only we help you with a low down payment, but also low interest rates. And in addition to that, you can qualify for down payment assistance programs through different cities, counties, and state. We have different programs that can help you. Closing costs. What are closing costs? Oh, I'm sorry, I forgot. That if you put less than 20% down, you may be required to purchase private mortgage insurance. So most of the loans come with mortgage insurance. Very few of them do not. So jumbo loans right now, if you put 11% down, will not have mortgage insurance. But for instance, all the programs where you put 3%, 5% will come with mortgage insurance. FHA is one of them, Federal Housing Agency. That is like a mortgage insurance is usually forever. Closing costs. The closing costs are, when we talk about closing costs and fees, you're including the loan origination fee, third-party closing fees, escrow fees, recording fees, transfer taxes, and other prepaids, typically between 3 to 5%. So when you're purchasing a property, you need to make sure that you have the 3% down payment and have between 3 to 5% for closing costs. Depending who the lender is, it might go up to 5%. What is PITI? So when you come to them with any loan officer, usually you hear the word PITI. What is that supposed to mean? So PITI means P is principal, is the outstanding balance of the loan that you're paying towards. Interest is the cost of borrowing the money. Taxes, that's the county. You do have to pay taxes for the property you are acquiring, and you have to pay hazard insurance, just in case we require fire insurance, just in case something happens to the property, you're able to replace it and still live there. Your lender may require an impound account. So again, if you put less than 20% down, usually you will be required to pay principal, interest, taxes, and insurance on the monthly payment. If you put more than 20%, it's optional. So if you put, usually when you put 20%, you don't have to include taxes and insurance. You can just pay principal and interest, and you pay taxes and insurance separately. There are some properties like condos and townhomes that have HOAs. Also, new developments and some properties, depending on the area you live, may have HOAs. What is an HOA? It's a homeowner association due. Typically, it's not included on the monthly payment, and it's not included on the PITI. An impound account. Impound account, again, is when you put less than 20%, we need to include the property taxes, the hazard insurance, and if you put less than 20%, we need to include what is called mortgage insurance premium, the MI. So when you are impounded, that means that we have a little savings account that we put all this money, and at the end of the year, the bank pays on your behalf. So that's what escrow or account or impound account means. The monthly HOAs are not included. They are giving you, I never done this before, but this is an equation on how you do property taxes. So basically, the county comes and does an assessment on the value. Then they charge you a rate. In this case, it's 1%. Then there are local assessment fees added to it. So what is a local assessment? Everybody likes parks, libraries. We some areas pay to get rid of mosquitoes. So there are certain things that you vote for every time there, that we go that we're voting for better schools, and there are more things added into your property taxes. So the people that pay property taxes are owners, not renters. So that's why the property taxes keep going up, which is really good for our communities, by the way. And that's how they come up with the assessment and the property tax due at the end of the year. There might be an increase every year. I think on the next slide, we will be able to see that 2%, I think. But yes, taxes is something that will increase a little bit every year. Employment and verifiable income. So things that we are taking a look to get an approval. We need to look at your income and assets. So Greg mentioned capital, and it's very important because capacity, sorry. It's very important because you're getting a loan based on the ability to repay it. So based on your income, we're going to give you a loan. Your income and asset is going to let us know how much the loan is going to be for. Employment status, we're going to be verifying your employment, also trying to figure out if you're self-employed, how long have you been in the property, are you seasonal? So there's different types of employment that we're going to be looking at, and they're all acceptable. We usually require 2 years of employment history with the same line of work. If not, it's very good that you talk to the person that is helping you so we can help you get there and make sure that we are able to get you approved. Credit history, again, Greg went over credit, very important. He mentioned different types of credit. Most of the loans, we can give you a loan at 620, but I can tell you the difference between a 620 and a 700 and an 800. To start with, the higher your FICO score, the more options you have. So we at Wells Fargo have at least 150 loans. We have a lot of programs and products, but depending on your situation, the credit and income you have, you can have a lot of options to choose from, or you can lower the amount of options you may have. So the lower your credit score, the less options we're going to have to work and the less programs we can work with. So it's very important that you work on credit. I do agree with him. The first thing we should do is get you pre-qualify and find out how much you qualify. Just come and talk to someone and get an idea of how much you qualify. So in the future, when you're ready to buy, you know what the steps are. Monthly debt to income ratio, we're going to be talking about that on the next slide. So let's hold on that because I do want to go over the ratios and how that works. Ability to pay future mortgage payments and obligations, those are things that when we're looking at employment and the ability to repay, we need to make sure that you can make the payments. Before we used to give we used to give loans based on credit score. You have a 780, you wanted $1 million. Hey, here we go. You have really good credit. You have 850, we will give you that loan. Can you pay it back? We didn't care. We didn't know if that was okay. But now the government requires that you prove that you have the ability, that your income is sufficient for you to pay it back so you don't lose the property. So very important when taking a look at income and credit. Other debts, yes, debts will determine that amount of money we will lend you because it will lower the amount if you have too much debt. So again, that will go into debt to income ratio. So let's talk about housing ratios. So the front end, so when we're looking at buying a home, we're looking at how much you're going to spend on the property and how much you're going to spend on other debts. So the front ratio means how much I'm going to be paying towards the mortgage. Just imagine the mortgage being your rent. So if it is $1,500, you know, how much can I afford? Can I afford $2,000? Can I afford $3,000? So the front end ratio basically is going to determine how much you can afford to pay monthly on the property you're going to buy. The debt to income ratio, the back end, that means that you're adding both. You're adding your mortgage and you're adding all your debt. Because everybody has a car on auto loan. We have student loans. Some of us have a lot of credit cards or have some credit cards. So what we do is that we add the housing ratio, we add the monthly payment for the mortgage plus the debts, and that will give us the debt to income ratio. When they said it is too high, that means that your income is not sufficient to pay sometimes for everything you owe, or is above the amount that we require. We're going to give you an example of what these numbers look like. Let's go to the next one. So here is an example. So they're giving you someone that makes 100,000 annual income. So if you divide 100 by 12, it will give you 8,333. So this person, we're looking at a maximum 30% of maxing housing ratio. So the only thing we do is multiply 33% times the 8,333. We came up with 2,750. So according to the bank, this is the amount that they feel comfortable. We're not going to have any issues if this is the amount that we're going to be lending you. Now we're going to be looking at your debts. So the maximum they're willing to lend you is the amount of the mortgage, which at this point is 2,750, plus your debt. So they're willing to go to 45%. Again, they multiply 45 times 8,333, and they come out with the amount of 3,750. In this case, your total monthly debt payments is 500. They ask you to subtract line 4 from line 3, and it tells you that the maximum mortgage payment will be the lesser of. Okay, so this is in the perfect case scenario. This is not happening right now, thank God, because if this was happening, we will not be approving people. 2,750 will be like best case scenario. Only 33% of your income is going to that. Right now, most of the time we can go all the way to 45 and 50% because the houses are a little bit expensive and we want everybody to get a house. not everybody is able to keep it at 33%. So we are allowed to go 40, 45, and in exceptional cases, we can go to 50. So you can get this house. So in this case scenario, so I want to just emphasize, in this case scenario, the maximum is 413,346 based on the interest rate that they are quoting there, which is 7%. But probably in reality, we can increase this a little bit more. I'm pretty sure Greg agrees to that. We will be increasing it because we want you to buy a house. And we know that somebody with 100K can actually buy a little bit more, and we will get you there. And with down payment assistance, what we can do in this case is that we can help you come in with numbers. So I'm going to give you an example. Right now, there is one program that is very successful. All the funds are being used already, but if people don't buy it, the money will come back in the market and they're going to reopen the loan, this down payment. It is the one from Silicon Valley. They're giving up to 40% of the purchase price. They're lending you a 3% simple interest, which is considered a second silence. What that means is that all the money they're giving you for down payment, you don't have to repay it until 30 years from now. So you can just forget about the money for now, just use it so you can buy your house. So if we're buying a house for $500,000 and they can give you 40% or 200, whichever is less. So in this case, if we buy a house for 500 and they're giving you 200,000, the loan is 300. But according to this scenario, you qualify for 413. That means we can increase the purchase power immediately. We can go to 600, 650, or 700, depending on your income. So down payment assistance are very good because one, they allow you to lower your monthly payment, or two, they allow you to buy more and to qualify for something that you might be interested a little bit higher than in this case, more than 413, we can automatically go to over 650 with the same monthly payment. So it will allow you more purchase power. Loan options. What kind of loan options? We talk about conventional loans. Down payment usually for conventional is between 3% to 5% down payment. Required using City of San Francisco home buyer assistance. So this is specifically for the city. So I guess they require 65% or 20%. Government insured FHA, minimum down payment is 3.5%. That means that you have to come up with that money. If you're borrowing 100,000, 3.5% will be 3,500. That's what it means. BA loans, if there is any BA here, please use these loans. They are great. BA, 0% down payment, 0% closing cost for military, and no mortgage insurance. It's a very good, and you get the lowest rate in the market. So BAs get a lot, and they should, for everything they do, they get a lot of benefits. And we hope that if you're a BA, take advantage of those programs. The one with Ostrich, it says that may require mortgage insurance. We talk about that. If you put less than 20%, most of the time you're going to be paying mortgage insurance. This mortgage insurance is to insure the loan and it's in favor of the bank, not to insure the loan. It's nothing to do with the property itself. It's to insure the bank. Down payment assistance, reduce your primary loan or cover upfront closing costs. There are different types of down payment assistance. Do I have time to talk about some of them? Just to give you an example, and we have some programs in Richmond. If you buy in the city of Richmond right now, there's a program called Call Home. They're willing to give $38,000. You buy in San Pablo, they're willing to give you 20%. So depending on the city and the county, again, there are different programs. The Housing Trust of Silicon Valley is giving up to 40% down payment assistance programs to buy in Alameda and Contra Costa. Greg just told me about Santa Clara. I will research a little bit because we used to have Empower there, but I guess there's a new one coming out. So we just have to look. Whatever you want to do, you can start. If you're a first-time home buyer, let us know and tell us that you're interested in taking advantage of these programs. They're great. They have restrictions. Some of them require that you come in with your own 3% down payment, and also some money for closing costs. They just want you to put some meat in the loan. So when something happens, if for whatever reason the market goes upside down, you don't let go of your property. I can tell you that I've been in this business for a long time. And unfortunately, in 2009, when the market went upside down, many people let go of their homes. So far, I haven't met any of those customers that let go of their home who feel like it was the worst decision they made, because those properties double, triple sometimes, and they tell me I'm paying more rent now than I used to pay in my mortgage. And that is true. So you just have to know that the market is cycle. It goes up and down, but also there is something about the market when you buy a house. Every 10 years, usually the property doubles. The properties never go down. They usually go up. Even when they go down and they become upside down, it's only for 1 year or 2 years, and then again they rise up. So you will always be okay, because no matter what, you're going to be paying rent. And if you notice, the amount of money that people used to pay towards rent now has doubled, tripled. And this money is money that you can keep it, and is a way to actually make money in the future for your families. The way I see it is like you can inherit these properties, and they will always double. Which savings account will give you the amount of equity that these properties will give you? I think it's a great investment. Pre-qualification. How much? Okay, can we go to the next one? There is a better option. Okay, things that you need to think about before you get pre-qualified. There's the reason I skipped that slide is because we're going to be talking about pre-qualification pre-approvals in the next slide. So I just want you to know that I'm going to go back to that. But how do you get mortgage ready? Is your credit score where it needs to be? So again, minimum FICO scores to start with is 620. You decide. We can have the same family, similar person. One has a 620, the other one has a 700. They will be having, even if they put the same amount of down payment, their program might be different and their monthly payment might be different. I want you to understand that, because a lot of people come to us and tell us, I don't understand why you gave me this loan when my neighbor is in the same job I have, makes the same money I have, and he's paying less than I am paying. So you have to understand that everybody is different. Everybody has a different situation. And remember what I told you, the higher your credit score, the more options there are. So work on your credit so you have a lot of options, so you can be one of those people that pay a lower monthly payment, because depending on that, that will be your interest rate too. Do you have enough saved for down payment? My recommendation is, even though the county, the cities, and the state are willing to give you money to help you, try to have some money yourself, because it becomes very worrisome when the underwriter comes in. You have a good credit score, but in the bank you have maybe $100 or just $1,000, and you are about to start making payments of $3,000. They worry because they're going to sign that loan, and it seems like in the bank you only keep $1,000. So even if we don't require any money from you, because we're willing to give you all this money with down payments or grants, we do suggest have some money just to make it easy for the approval and to be able to close without any problems. Do you have 2 years history of consistent income in the same industry? Like I said, it's very important. If you have the same line of work, even if you move from one job to the other, but it's the same line of work is not a problem. The problem becomes when I'm a nurse and I become a self-employed janitor, or I'm a mechanic and I decide to start studying to be a nurse. That's different types of lines of work. We don't have enough experience in either of those in that new line of work, and that might be questionable to see if you're going to be able to survive. So, but if you're, working for Kaiser and going to St. Rose, not a problem. You're still a nurse, you go into the same medical field, have not a problem. We don't have a problem with that. So moving and getting a higher increase in income is fine. It's just when you move from one line of work to another one, then it becomes an issue. Have you paid off or reduced your monthly debts? Very important. Before, this is the reason you need to get pre-qualified. We need to find out what your credit score is, how much debt you have, and if there is any way we can improve that situation so we can increase the amount or the programs you qualify for. Are you saving your documents and records? Well, we require 2 years of tax returns, pay stubs. So it's a good idea that if you're trying to get ready to buy a property, to put all your documents together. Usually it's 2 years of taxes, 1 month of pay stubs, and 2 months of bank statements. Okay, let's get pre-approved. Okay, so here we're going to be the difference between pre-qualification, a pre-approval, and a commitment letter. So pre-qualification is the following. This is when you come into the bank, like right now you're taking an education class, you think, you come in and you tell Greg, you know what, I'm planning to buy maybe in 6 months or a year from now. Hey, let's get a pre-qualification. Pre-qualification, you come to the bank and you tell me, Greg pulled my credit, or I pull my credit through annualcreditreport.com. This is what I find out. This is what I have. My income is like, I don't know, 50,000 or 100,000. Everything is verbal. So pre-qualification means you come to sit with me and verbally you tell me what your situation is. Again, I input the information and I give you a pre-qualification based on the verbal information you provided. Now, pre-approval. So that is just to give you an idea. This is for people that are going to buy 6 months or a year from now. It's a good idea to know where you stand and what are we looking at. Now, pre-approval. Pre-approval, I pull your credit. I request tax returns, W-2s, pay stubs. How is that important? It's because I was working from the city. I was as a landscaper, and now I decided to go on my own. This year, I'm self-employed, and my business is making a lot of money. But what is the issue there? The issue there is that you don't have 2 years as self-employed. It's great that you're making more than you were making with the city, but because you don't have 2 years, even though it's the same line of work, it's 2 different entities. One, we know for sure you're going to be getting this money. With self-employment, usually takes 2 years to 5 years to establish a business. So the bank is going to stop and wait until you have at least 2 years before we get you a pre-approval. This is why looking at your taxes, W-2s is very important. Another thing is on pay stubs, you might have a loan there that you're paying. You might also be paying child support. Your wages are being garnished. It's true, you make $10,000, but when we look at your pay stubs, there is a different story there. So we need to take that into consideration because the income might be different than what was stated. Not that you were misleading us. It's just the fact that there are things that are happening that are different than what we were not able to see before. So pre-approval means that we're looking at everything, and this is what the realtors want, so they can go open the doors for you and show you properties. They want a pre-approval, not a pre-qualification. This is when the person is serious. And if you are extremely serious, you come in and said, I want a commitment letter. Commitment letter means we're going to review everything. We're going to verify income. We're going to call your employer. We're going to send everything to the underwriter to verify. And after we do that, we give you what is called a commitment letter. What is a commitment letter? Meaning that the only thing you need to do is find the property, get in contract, and we do the appraisal, and we're done. So if you're very serious and you want the process to be stress-free, try to get a commitment letter from the bank before you start looking. Because then the only thing we're waiting for is for the appraisal in that property, because everything else has been already done. So there's three things. Pre-qualification is verbal. Pre-approval is a good approval because basically you come in and I'll give it to you. A commitment letter is given by the bank saying, we're just waiting for the appraisal, and it's done. Affordability. Some expenses not included on the debt to income ratios. Childcare, education, vacation, remodel projects. So you need to, like Greg said, make a budget, because even though I might qualify you for a loan, you might not be ready to make that payment because there are other issues and other expenses that you need to take into consideration. Your household budget is the best assessment on how much your household can afford. Yeah. So make a household budget. You tell yourself how much I want to pay, because unfortunately we are salespeople, and when you go to a realtor and a loan officer, we're going to stretch the dollar and max it out, because in our mind, you want to buy, you want to buy, and you want to buy your dream home, and maybe your dream home is great, but maybe we're not able to afford it at this time. We need to start somewhere. So you need to let us know what your limits are, because like I said, I don't know that you have childcare, because I'm looking at ratios and I'm going to maximize it, but we don't take into consideration childcare, education. I don't know if your kids are going to private schools, so it might be something that puts a strain on you, and we don't want to do that, because you don't want to be stressed out with the monthly payment. So you need to know how much you can actually afford. In California, property taxes increase 2% every year. So we talked about that before, so I wanted you to know that when we were talking about that the taxes do go up, the monthly payment might change, not principal and interest, because most of the loans are fixed, but things that might change are the property taxes and the insurance lately, because of what's happening in this area with the insurance. Home buyer workshops. So there is a calendar that you can go to www.homesanfrancisco.org. I am pro educating the public. The more education you have and the more aware you are, remember, this is the biggest purchase you're going to make in your life. So if you were going to buy a Mercedes-Benz, you're not going to buy it from the street. I'm pretty sure you're going to go to the dealer. So the same thing with the house. You're going to be spending almost $1 million. Get educated, get yourself all the knowledge possible to make this as stress-free as possible, and also to understand what you're getting yourself into. There is different numbers. You can call 415-202-5464. And like Greg said, you can go to info@homesanfrancisco.org.
May I make a quick comment on that last slide, Mariana?
Yeah, sure, please.
First of all, for all of you listening, that was pure gold. Sometimes you have something in your hands and you think it's gold and it's not. Just every syllable that came out of her mouth was a gift. I hope you were listening and taking notes, and remember, it gets even deeper than what Mariana gets into when we do the training. And homesanfrancisco.org, that website is your key to beginning in a lot of cases. This is the phone number to reach them and the email address. But I also recommend you go to their website. I do constantly, quite frankly. They also keep information for us as housing counselors, let alone you, for what's available out there for you. It's a real gift. Go ahead and go to the last one here. this fair, Marie, I almost want you to jump on this. This is a fair that's coming up on Saturday, the 21st. I went to the one last year, and I got to tell you, even as someone in the business, it was fascinating finding out all the things that are going on for first-time home buyers that are available. I mean, it was an education even for me. We'll know the particulars, but a lot of times, as an example, the information you got from Mariana was current, spot on stuff. You got to understand when you're talking about lending money, guidelines and structures change. So you got current information right now, invaluable current information. They're going to be the same quality of people at the Affordable Housing Resource Fair and Help Center. When you come to that, it's worth taking a half an hour out of your day. I'll be working in the housing counseling bin, which is Marie told me is going to be the sweatshop. I'm going to be all day long meeting clients and going deep and yeah, and I'm ready, Marie, just so you know. So we would dearly love to have you come and just see everything that's out there, everybody that has a booth, and get ready because what you might think is impossible because of what you hear are home values, make an informed decision. Take advantage of all this information that's out there. You have to, especially in an area like ours in the Bay Area, where a lot of people think there's no hope and they just don't have a clue. I would encourage you to come to the show. It's literally a fair, so you can just walk around the booths and then go through the rest of your day. There's the location at USF, time 10 to 3. Marie told me that I'll be working well into the evening, though. No rest for me. No rest for me, she said. No, I'm teasing. She's just joking. Anyway, look forward to seeing you there. And this is it. This is the evaluation link. We would love for you to all fill out the evaluation, please. It makes a big difference. Whoa, the screen disappeared. If it comes back up, I see Mariana's beautiful face. Maybe you see mine. Don't run away if you see my face. Um, if it comes back up, this is the time for questions. So I guess we're going to unmute you, one, and also you can ask questions. I see one new in the chat box. Ooh, I like that. Check your credit one that came up. A reminder again. Oh, Marianne put in the link so you can click on the link and go right to the site and do a bookmark if all of you who are still around in there. Okay. Any questions? And Marie, yes, sir, you can shake your head, yes or no. Are we going to unmute them? Or is it all going to be in the chat room if they have questions?
Yeah, it's whatever you feel comfortable with. You can ask your question in the chat. I know that Greg did answer one through the chat earlier, or you can unmute, whatever works best. I also put the evaluation link in the chat as well so that you could fill that out. But yeah, whatever works best, go for it.
Okay, you got the opportunity here. We had a great question on student loans that taxed my brain. I should have let Mariana answer it, but I just dream of the days that I used to be a lender. The decades gone by, Mariana. The day, though I'm old. Let me move further down and see. No, nobody's asking any questions, even though I'm going to use initials of a couple people I see, LZ, CG, even though I see you there and you haven't asked anything. And I let you know that, you know, all this genius is in front of your face, but that's okay. That's all right. Just make sure you jot down the information. And oh, one new, two new. Oh my God.
Sorry, it was
Oh,
just me. But
no, it wasn't. Look
oh,
at
and
CG.
Yeah, Carla, they said, thank you so much. I learned a lot. I can't wait to join the housing fair and continue learning through Homesa. Well, thank you for
Uh,
coming, and we're looking forward to seeing you next week.
uh, what do you think, Marie? You got the power. You are the power. So you tell me, do we stay on for a little bit more or?
I think that if anyone has any questions, you can reach out to Greg or Mariana. This presentation will be sent out. Um, oh yes, thank you, Letty. They said that you answered my questions through the presentation. Thank you very much. Thank you.
Okay, thank you.
Um, yeah, you can reach out through to Greg and Mariana. This presentation will be sent out with their contact information. So yeah, I think we're good to go. So if you have anything else, Greg or Mariana, we may be done.